Hello everyone, today I'm going to talk about stock split, where I will discuss on what exactly is a stock split and what does it mean to retail investors like us. Also, I will touch on some of the past stock split performances. But before I dive into the detail, as usual, hope you can help with the YouTube algorithm by liking this video. Your little support means a lot to me. Okay, stock split seems to be in trend, huh? Just the first quarter of this year alone, we already have 3 companies announcing stock split, namely Google, Amazon, and Tesla. It's like stock splits everywhere. So now let's have a quick understanding of what is a stock split. It is a move where a company takes to increase the number of outstanding shares and decrease the price of each share. Here's a quick example. Say Tesla is $1,000 now and you hold 1 share. And for instance, the stock split is 4:1. So after the split, you will have 4 shares and each share is $250. It's like slicing one big pizza into 4 slices, but the size of the whole pizza is still the same, which is $1,000. Easy to understand, right? Now let's take a look at why do companies split stocks and what does it mean to retail investors like me and you. First up, stock splits are often an indication that a company is performing well, like really well. Think of it this way, a company's share price probably wouldn't be high enough to warrant a split if it wasn't executing well and outperforming its competitors. I mean, can you imagine Grab splitting their stock price, like 5:1 ratio, where 1 share of $5 give you 5 shares of $1? It'll be quite hilarious, right? So I don't think that's gonna happen. Furthermore, Grab stock is not even worth $5. Anyway, this goes to show that stock splits are usually announced by companies with strong fundamentals that are likely to continue into the near or even long future. Hence, if you are holding on to a share which is going to be split, it is very likely that you are invested in a solid company. So good job to you. And this is what stock split means to you and me. On the other hand, though it is a sign that a company is thriving and its stock price has increased tremendously, it also means the stock has become less affordable for investors who can't get hold of fractional shares, thus making it difficult to attract new investors or new funds. This is when stock split comes in to make the stock less expensive and enticing to individual investors. Additionally, it also offers some form of benefit to their employees, as most big firms allow their employees to buy shares at discounted price. So imagine 10% off a $2,500 stock versus a 10% off a $150 stock, which is more affordable. So the above views were shared by Amazon and Tesla. For instance, in the statement by Amazon, it says the split will make the share price more accessible for people looking to invest. On the other hand, Tesla also stated that it opted to conduct a stock split to make stock ownership more accessible to employees and investors. Lastly, stock split also benefits option traders because it is less expensive, like you don't need to stand by $100,000 to sell puts or go on margins. But this is another topic altogether, so I will not elaborate too much. Interestingly, a mere announcement of a stock split usually can give the stock temporary boost, as you can see from Google, Amazon, and recently Tesla. For example, Google went up more than 10% right after the announcement, while Amazon was temporarily up by about 3 to 4%. And then you have Tesla still on its way up since they indicated that a potential stock split is coming. I think it's a psychological thing. Alright, now let's take a look at the various stock performances leading up to the actual stock split date. For Nvidia, the stock split was announced on 21st May 2021. Actual split was on 20th July 2021. As you can see, the split adjusted price rose from $150 to about $185. This increase is more than 18%, and at one point it was even up by at least 30%. For Apple, stock split announced on 30th July 2020. Actual split was 31st August that same year. The split adjusted price rose from about $90 to $120. That's more than 30% increment, but it did drop a fair bit later on before going up again. Then you have Tesla. Their previous stock split was announced on 11th August 2020 and it took effect on 31st August 2020. Within these 20 days, the stock price increased by as much as 80+%. To wrap this video up, I would like to highlight that stock splits have absolutely no effect on operating performance of an underlying business. In other words, a company isn't going to sell more or less of its products and services just because a split is going to take place. But it does show that the management is confident about the future as they believe that the stock price will keep going up and therefore they need to lower it down. As you can see from this chart, these solid companies just keep going up. Also, when more retail investors are able to pump in money into the stock, it may potentially drive the stock price higher. Personally, I feel that before or after stock split, Nvidia, Google, Apple and Tesla are still very good companies and solid stocks to buy for the long term. Lastly, do keep in mind that all this stock split euphoria and FOMO tend to be short-lived. When it comes to long-term investing and returns, it is still more important to pay attention to the company's performances and fundamentals. Alright, that's all for this video. What are your thoughts on stock split? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.